Welcome to the Fintech One-on-One Podcast, episode number 334. This is your host, Peter Renton, chairman and co-founder of Lended Fintech. Before we start this episode, I want to tell you about a brand new event from Lended Fintech. Fintech Nexus, the Deal Makers Summit, will be the first major in-person fintech event of the past 18 months. A hand-curated audience of venture capitalists, bankers, fintechs, and debt investors will be meeting face-to-face at an event 100% focused on doing deals. It will be happening in Miami on September 1st and 2nd. You can apply to join and find out more at lendit.com. Today on the show, I'm delighted to welcome Bob Cortright. He is the CEO and founder of DriveWealth. Now, DriveWealth is a super interesting company. They are really one of the pioneers of the embedded finance space. They have created the ability for any company to embed stock trading, fractional stock trading into their app. But there's so much more than that, which we actually get into in some depth on the show. You know, Bob shares how they were the first company to ever introduce fractional stock trading and what that meant for his company. We talk about how the technology works, some of the big names that are actually using DriveWealth today to enable stock trading. And we also talk about how brands, non-financial brands, should be really thinking about this opportunity. We talk about crypto, of course, and Bob gives some hints as to what the vision is for DriveWealth and how they're moving beyond stock trading. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Bob.
Thank you, Peter. Pleasure to be here.
Okay, so let's get started by giving the listeners a little bit of a background about yourself. You've had a pretty interesting career when I look at your LinkedIn profile. So why don't you just touch on some of the highlights?
I started actually in the FX business, a company called Rothschild, and Rothschild back in the early 80s, doing FX arbitrage. So I had a long experience working in risk management, trading, portfolio management, worked in a hedge fund for a number of years. But after about 15, 20 years in the business, I decided that there was an opportunity to go on my own and build a retail FX platform. And that was back in late 1999 when Clinton signed the Commodity Modernization Act, which allowed for retail FX. Mm-hmm. And as you know, back then, there's a big rise in building retail FX trading platforms around the world for retail traders. First time they really had real access on a platform to trade retail currencies. So, started a company called FX Solutions, learned a lot from that experience, starting really early 2000 throughout the crazy times of FX, learned a lot about how to build a business. And one of the things we've learned there was that the real power of aggregated retail, which obviously plays into why we started DriveWealth in 2012. We saw a lot of things around the world in terms of the appetite for retail FX trading by retail investors, but they didn't really have a really good access, affordable access to the most premier market in the world. That was U.S. equities. And obviously, as you know, the technology, the NASDAQ, and what's going on in the technology sector, and a lot of these other e-commerce firms around the world, I mean, there's been a huge boom in value in these tech companies. So we wanted to, obviously, when we built DriveWealth, to emulate some of the things we did at FX Solutions in terms of giving people affordable access around the world. What we realized through that boom was it was really the global infrastructure set up in brokerage, as they called it, was not really suitable for digital advice or digital experience on a phone or a digital device. So that's kind of how we got to where we are today in terms of building out a real viable business. Is really we focus on the infrastructure side.
Right.
I'll go back a little bit here, Peter. I don't want to take too much time in the beginning, but in the late 2008s, 9s, when we had the advent of wealth management, or robo, as people call it today, from some of these guys like Betterment and Wealthfront coming around, and then the big boom with Robinhood and direct trading and equities, zero commission trading. And then obviously we had the savings boom with the guys like Acorns and Stash and things like that. Those are great B2C products, but to really be viable and grow the business over time, we understood that the infrastructure had to be rebuilt as well.
Right. Tell us a little bit about the timing then. So it was 2012, was that when you started DriveWealth?
Really late 2012. Really the first couple of years of DriveWealth was really working with the regulators in terms of, getting the right license. So think about this back then when you went to the regulators, you wanted to be global retail. You wanted to address the retail market globally, give them access. That was part of the whole democratization rage, right? Going back, democratizing whether it was banking or lending or anything else, democratizing the retail markets so anybody could participate. But also one of the things, we wanted to do retail, we wanted to work through the social networks, which was in their minds, they're thinking about a Facebook and things like that, which I think today it's still a possibility. I mean, a lot of these firms are entering into the financial services business. You hear the term all the time that everyone's a fintech company.
Right.
Everyone's involved in financial services. That's, that wasn't the thought by the regulators back in 2012, 13, 14. But the primary goal for me then too was to get the ability, like FX and like crypto today, is to fractionalize investing in equities, right? Because we saw the trend of large price stocks. There are three cornerstones of investing in my mind: with compound interest, diversification through your portfolio, and dollar cost averaging. And you want to make it affordable for anybody with any amount of money to be able to do that. And the only way to do that was to fractionalize securities. That took about 2.5 years. When I first brought it up to the regulators in 2013, if it wasn't retail, which is their primary goal, was to protect retail, and then global retail was a little even more scarier because of the AML KYC concerns.
Right.
But retail suitability. And the last thing was, what do you mean by social networks? And that was really the advent of these great digital wallets that were creating these ecosystems around these, big applications around financial services that we really saw started in China back in the early days of Tencent and the JD.coms and such.
Right. I hear you talking there, and it feels like you were early. You might have even been a little too early, it seems, in some ways. But obviously, you're still around, so you've survived the early days. How long did it take to get your first paying client?
I'm always early. It felt like that in the FX space. It felt like that in risk management space, a lot of things that we're doing. People laugh that, you have to survive those first couple of years, and being early is not the best way to do that. I really had... Based on my past businesses, not only FX Solutions, but Financial Labs and the great team I had there, we really had a conviction to the fact that the whole infrastructure stack had to be rebuilt. And our commitment to it was pretty high. We had a lot of experience building businesses, so we did it in a pretty lean way. We had a lot of experienced people, not only in the brokerage space, and I'd love to talk about embedded finance and what I mean, the difference between brokerage. And brokerage is really just the underlying regulatory product. But we really stuck to our conviction that the equity space, interesting enough, was so disjointed in my view versus what we were doing in the FX space and recreating that for retail that it was obvious to me that had to be transformed, right? So the idea that a stack that basically has so many different parts to it, you had introducing brokers, you had basically firms like Broadridge doing stock, AML, KYC and taxing, and yet clearing firms and execution firms and custodians. I mean, everybody had their hand in the stack, and which not really conducive to an affordable retail experience. And I have to say, one of the great things about this is building that infrastructure. We have so many great partners now around the world. They are so heavily focused on that user experience, which is tremendous. I give kudos to them because they're the ones building the experience for the customer, and we're just applying the plumbing to build these cool products.
Right. So can you just describe the plumbing? What is it that you're actually doing? How does your technology work?
Really, the underlying product is brokerage, but it's the way we're basically building out the APIs in a very unique way to allow customers to, really customize that experience on the front side, on their user experience side. They're the ones that build the application. So we have probably close to 150 or more different APIs today, because there's a lot of things involved in brokerage, right? There's a lot of regulatory requirements. I mean, I love some of the ideas that the fintechs come up with, but from a regulatory standpoint, it's just not a viable way to do business. You can't do some of these things. So we have to be very creative in the way we build. One, think about money movement, right? How do you move money from a real account in Brazil to a US dollar account to buy Apple? There's a lot of things that go into actually executing the trade. You have to convert the currency. Trading securities has to be done in US dollars if it's a US security. So you have to do that in a very seamless way so the customer can literally onboard their account, register as and become a brokerage account, right? And do that in a way that's so seamless and frictionless so the customer doesn't feel the pain of going through all that process. So we build all these things through API. Our big goals here now in 2022 is to make that as seamless as possible, to create the API layer that's very digestible for the partner. But we do a lot of the work on the backside through the APIs. And they create a lot of different functionality that the customer can experience in a seamless way, and it makes it painless for our partners as well.
Right, right. And so I just want to touch on fractional trading. You mentioned it. You look at some of the most popular stocks in the world there, and that some of them are trading for thousands of dollars a share. How important was fractional trading really to sort of getting you guys some momentum? And when did you actually enable fractional trading for your customers?
We pioneered fractional trading. We've got the licenses back in 2013 to be the first real-time fractional trading platform in the world.
Okay.
And the reason we did that was because of my FX experience. Right? I knew that somebody with $100 might want to buy Berkshire Hathaway A, for instance,
right,
or Amazon. And like I said before, the pillars of really successful investing is diversification and dollar cost averaging. If you want to put $50 to work every 2 weeks when you get paid, you want to put that in a diversified portfolio. You needed fractional trading to do that. We saw very early at FX Solutions, people could buy $1 worth of yen, right? And that was incredibly successful. I mean, back in those days, as the retail platforms developed in FX, it was the exchanges that were offering all these currency contracts, as you know, were quite big. They were quite large contracts, and it took a lot of risk if you had to buy one contract of yen or Swiss francs or whatever. We saw that same theory we put to equities, right? If you want to buy a good portfolio of securities and you only have $50 a month to invest, fractionalization was critical. We don't really call it fractionalization. That's just the mechanical process. It's really the ability to do notional trading, right? And when you go back to it, you think of financial services, most people think about the money they have to invest. They don't think in, how many shares of Amazon can I buy? Well, I can't even buy one. So I want to start with $100. That's the interesting thing. I don't want to dwell on too much, but that's the big transformation in the world, say, in equities, right? All the other businesses, even when you talk about crypto, 8 decimal points, and it's decimalized. We believe in that. The whole idea is now that the equities business with zero commissions, what Robinhood did, and thinking about that, the equities business has become a notional spread capture business, just like every other business. It's no longer a share commission-based business because people aren't charging commissions anymore. Really, it's a struggle to do that.
And I imagine that would have been a real driving force for your business too, right? It wasn't that long ago where you couldn't trade shares for less than $7 or $5, not that long ago.
I mean, it's not that long ago. Within a couple of years ago, they were still advertising, constantly $4.95 a trade. And they thought that was a big revolution. And then all of a sudden it was zero. And they finally capitulated. And it took them a number of years to do it. And then you saw quite quickly after that, the invention of fractionalization, right? Where people started calling it slices or whatever else. We've been doing this from day one, understanding that to really engage young investors. And I really think it's the key behind financial literacy, right? We've been talking about embedded finance for 5-6 years now. The reason embedded finance is different than brokerage is basically someone decides they have enough affluence that they want to go out and they want to start investing in a different way or open a brokerage account, which is very intimidating. Not everybody feels comfortable that they have the knowledge to do it. Embedded finance is much different, right? Embedded finance, you're actually participating in it with small amounts of money, taking small risks, based even on your behaviors at times. Sometimes it's not even your own money. It's rewards you're getting like stock backs or roundups, things you're doing in your consumer behavior that translates into your investing behavior. That's why it's so powerful. And that's why embedded finance, I think, is in its early days. And it's being done all over the world, right? In terms of the way they offer things to their customer base.
Yep. So how much are you focused inside the US with enabling your services there versus outside the US?
Well, we don't discriminate. We work with people that really want to offer a really cool product, investing product, and help their client base improve their financial situation, their life financial situation. Then the beautiful thing about the way these APIs have developed and evolved over the years is it allows anybody in Latin America or in Asia or even Europe or here in the States to build a product is the same, right? They're just utilizing the same APIs. So if a large digital wallet wants to build something out of Latin America, it's no different than what Revolut does in Europe. It's the same process. They just put their own customized twist on it and what they want to offer to the customer.
So then say I'm running a fintech, it could be in the US, it could be Brazil or whatever, and I think, there's been demand for stock trading from my customers. I want to offer a stock trading solution. What's the timeline? What's involved from start to finish, and how will you enable them to do that?
Yeah, so let me just go back for a second on what you said before. I mean, the interesting point you're making is really it's the regulatory environment that is the real hurdle. Every country has some, jurisdictionally, they have some different regulatory rules. So that you have to understand very well. We've been doing it, obviously, for a long time now, going on 7-8 years. where we basically are, spending a lot of legal time in these countries, understanding the legal environment. So that is the time frame. That's what really manages how the time to launch, to your question, right? It's not technology. The integration period, I mean, we've had guys who are sophisticated, put a team to it, can do it, launch in 30 days. Right, launch a product in 30 days, right? Really what the constraint is really understanding the regulatory environment and what they want to do, what type of products they want to offer to make sure that it's compliant with their local jurisdiction, right? For instance, we can't just walk into a country and, obviously people have had this, they've seen this in real time, and solicit customers directly. You just can't do that, right? I mean, you've got to be locally registered. There's different things. So we work with partners that are locally regulated and abide by the local jurisdictional rules. We just launched TOS in South Korea. Technology-wise, they're very sophisticated and had a great product and a great wallet and doing some really cool things with that. But it was the regulatory issues that we had to get through with the KSD and things like that. That's what makes it difficult. That's what takes the time.
Right.
And that's where the real knowledge comes in. Operating my whole life in the FX business, which is a global business, as you know, moving monies from cross-border is not always as simple as it sounds. It's the same with regulatory in terms of people investing in securities. Some countries don't even allow people to invest in securities outside their country. So we're getting through all that, and that's the big hurdle in terms of timing.
So have you found, like, from the US regulators, is there positive feedback coming from them? Because I see what you're doing is attracting capital into this country from all around the world to the, obviously the stock exchanges here are the largest in the world, and a lot of people want to own the companies that trade here. And so, I mean, I'm just curious about that because you're basically bringing money into the country. Is that something that the regulators appreciate?
Thanks for mentioning that, Peter, because they don't really see that deeply sometimes, in the sense that we're bringing good capital to these companies that are doing well in this country and people want to consume and they want to own, right? And it's a really powerful thing. And one of the things when we deal with regulators outside the country in different parts of the world, we explain to them is that the people don't leave the country, it's the money leaves the country. And they're concerned about that sometimes. We don't want, we look at China right now, cross-currency movements and stuff. They're kind of cracking down on people leaving, investing outside, which I think is a foolish game, right? Because the people aren't leaving. They're just looking for a better return on their money. Right? If you don't let people do that, if you don't let people participate in the real growth areas of the world, and some of it's been our tech world or e-commerce world, we've had some really great successful companies. I mean, Apple just hit $3 trillion in market value. I mean, you want to be invested in those great companies, right? So you're not going to keep up if you're sitting in a country, for instance, like in Africa. I mean, they've really recognized that their citizens investing outside and being part of the world, investing, are getting returns on their capital that they're not getting internally in their own local country. But that money comes back into the community, gets spent in the local community. They start businesses in the local community. They grow confidence from a financial standpoint. People like Tipper Cash. These companies are doing amazing things in their local geographies in Africa. It's a great point that you make, that having the ability, and I think COVID did this too, right?
Right.
And then this whole idea of COVID, people shut down their borders. The first reaction, shut down your borders. But it actually had the opposite effect in financial services. It globalized financial services because everybody was chasing yield now. When the government started printing a lot of money, interest rates went to zero, people were saying, how can I get a return on my money? How do I protect my currency? Or how do I get diversification out of my currency? The regulators here understand that value.
They do.
They're promoting the U.S. capital markets, best companies in the world, to your point. And the more capital, the more things we can do. I think countries that really try to shut down the border and cross-border investment is not going to end well.
Right. Can you give us some sort of metrics on the scale? How much flows through your platform? Well, what are some of the metrics you could share?
We're not an AUM business like an advisory business,
sure.
Right? So you see guys like Schwab and TD merging. You see, Morgan Stanley buying T-Trade. To me, these weren't technology advances. These were basically, consolidation of costs and growing their assets under management so they can charge more, make more money, right? Our business is actually transactional, which is different than most brokerage businesses and where they're going today, right? They're more looking at asset management and the things they can do from the asset management side. We are looking really at more embedded finance. So we have customers that literally do 40, 50,000 transactions a day on their own. I mean, and these are maybe anywhere from $5 trades to $230. I mean, it's not a typical thing, but at the opening of the day, we may have over 1 million orders lined up at the opening. We've kind of replaced the smile curve in their stock exchange in the way we created the ability to get ready to open up at the trade. And now we obviously do, pre-market open and pre-market trading or post-market trading. But yeah, literally our bigger customers do tens of thousands of transactions a day.
Wow. Okay, so then can you tell us some of the names that maybe we recognize that you're working with today?
Let me first preface that by saying I don't favor any one or the other, because the appreciation I have for our partners and amazing things they're doing within these digital wallet ecosystems or what people are building, these ecosystems around retail financial services are just amazing. They're producing the experience, right? They've built a brand. They're providing the user experience. We're just providing the plumbing to do these things. On the wealth management investment side, some do a little bit more trading, but not most. Most are more financial literacy oriented investing, portfolio management. It runs the gamut, anywhere from someone like a Revolut in Europe, who's a very active customer, has got a really great base, they've done a really great job, to someone like Moneyline here in the United States doing more banking and wealth management for their customers. And then you have someone like Stake in Australia who's doing more day trading, more like a Robinhood type environment, right? More sophisticated, bigger trading sizes, things like that. And also, it could be a credit union that's offering their members, obviously, the ability to invest in a very, very simple and obviously, like you said, with fractional trading in a very basically digestible way, like put a $50, $100 a month away into a portfolio. So it runs the gamut. But it really is our partners are doing a tremendous job building these experiences.
What about like big brands that not necessarily maybe outside of finance? How should they be thinking about DriveWealth's offering?
They are. The idea here is back to the embedded finance idea. It's not that these companies want to become brokerage companies. They don't want to be brokerages, right? But what they want to do is offer their customers, their valuable or loyal clients, a better use of their capital and grow their capital. So one, they can spend more money on their platforms, or they can have a better, life in terms of financially. And they become more financially literate by just experiencing it by doing, right? So what they're really looking at is they're really looking at the embedded finance trend, offering things like rewards, stock. If you even think about the gig economy, right? Having a wallet for your customer, right? Or your gig partner, you can provide them with rewards. You can provide them with bonuses. You can provide them with stock plans, HSA, health savings accounts are exploding under us. We're doing a lot of cool stuff with some great partners in the HSA space. So providing your loyal customers access to financial products they didn't have before at a very affordable rate, right? Just promotes their affluence. It's lifting all boats, really, because they're having more disposable income because of the way they can invest now at a much smaller cost, for sure.
Right. I've also seen things like, I think there's a couple of fintechs that are doing this where, you might buy a burrito at Chipotle and you can get like 5 cents or 10 cents worth of stock.
You're onto it, Peter. Right. It's funny when some of these other companies build portfolios, I think, they had a contest and said, okay, build your model portfolio. And it was a bunch of kids, like 12-year-old kids that won the whole thing in terms of return over the course of the year, because all they put in the portfolios are things that their older friends and them were consuming. That's a genius idea, right? So buy what you know, as Peter Lynch used to say, buy what you understand is what, Warren Buffett used to say. Those are performing really well. So you go to your local Starbucks and you swipe for a latte and you get 5 cents or 25 cents of a latte stock, of a Starbucks stock. I mean, that's where we're going, right? I mean, that promotes the brands. It promotes what you're consuming. So that's what I'm talking about, consumer behavior relating to investable behavior. And these are people that open up a brokerage account through these ecosystems that never thought about, I'm going to fill out the paperwork and go to Schwab, right? They're a loyal customer of someone who has a wallet, and now they're getting this added benefit of, okay, it takes a couple of extra clicks because they already have a banking, right? So it only takes a couple extra things to verify your brokerage account. It's opened up within a minute or two. And now they're getting benefits on, like you said, stock rewards or roll-ups on their purchases and things like that. Literally, we could build a portfolio of 30, 40 stocks with $1. So it's very powerful over time. And it's very engaging, by the way. Hey, how am I doing this week? What did I get? What did I earn? And you watch this nest egg grow in a way that you would never have done in a brokerage account.
Right. I want to talk about the huge growth of retail in 2021. We started off the year with this sort of meme stock craze, like the GameStop and AMC and those sort of stocks. I'd love to get your perspective on that, because it felt like for the first time, individual stock investing was on the front page, not just of business journals, but of just regular newspapers. And what did that do for your business? And what's your perspective on it?
We're not really a day trading shop. We're not, an active trading shop. Our partners are really looking for investments and wealth management products and building portfolios, like you said, rewards over time, that embedded finance versus brokerage mentality. But it brought awareness for sure. I mean, just to give you an idea, we started 2021 with about 8 million accounts, and now we have closer to 17 million accounts today, predicting probably to double that this year with the type of partners that we're bringing on. But it's created a lot of awareness, and people are much more curious about it for a couple of reasons. One, you had the Reddit phenomenon, that really benefited the Robinhoods and the brokerage type, the Webull and those guys. Our partners are much more focused on the wealth creation for their clients, right? So obviously the people understand that it's happening. They understand that they can get involved. So the awareness factor has gone way up. What I think now is becoming really important, and we're seeing it evolve, is the financial literacy aspect. People are now saying, because of the phenomenon, right, we need to better educate people. And I think the same thing is when we're out to enter the crypto space, we're looking, to model our equities business after what we're going to do in crypto. And we think education is such a critical part of that, right? It's interesting, to speculate and spend a few dollars on buying a cryptocurrency and seeing what happens. But when you start to think about long-term, how it fits in your investments and your portfolio, that's a different thing. People need to get literally financially literate around diversification, risk, those types of things. So there's some of the partners that we're working with now on the crypto side really understand that they want to make sure that their customers get that value of education and literacy before they jump in.
Yeah, that's really good points.
Just to make sure that it balances out, their whole financial life.
Right. I want to talk about crypto just for a second. I know we're almost out of time, but your business, from what I understand it, is obviously it's based on equities trading in the US stock market, make that available to anybody. But crypto, obviously it's 24/7. It's, as you say, it's fractionalized down to, 8, 10 decimal places. Do you have plans to incorporate crypto trading into what you're doing, or how you think about crypto?
We're not really in the sense that we're not an equities platform, right? We're a platform for retail investing. Mm-hmm. So let's start right there, right?
Okay.
We're building an infrastructure, a platform that allows people to, from a retail compliant suitability standpoint, invest in anything that they want to consume, right? So the funny thing is, like I mentioned before, you need to go from fiat to buy a hard asset or security, right? And then people want to take some of those hard assets and convert them into cryptocurrencies. Cryptocurrencies, in my opinion, aren't an asset by themselves, right? They're just like fiat, but they're in the virtual world. They're a means to exchange for goods. And then you've got the virtual asset world. I think is going to be an amazing place to be too. So what DriveWealth's ambition is really to be a retail platform, the exchange of things. Any retail asset that you want to consume can be done through our platform. We want to bridge the real hard asset world with the virtual world and let people invest where they want. Obviously, that's why financial literacy comes into hand. I mean, do you buy bored gorillas or whatever that you can consume? or do you have a mixture of some Apple and some Tesla and stuff in there?
Right.
You might want to own some Bitcoin, whatever. But my point is that whatever our partners in the retail industry, the industrial clients want to consume from an investment standpoint, we want to provide. We're really looking at our international expansion now in international securities, right, to give people some more diversified, around the world. But you can do that through our ETF market very easily. So we're looking at the major countries in terms of their exchanges and what they do there, just to round that out a bit. But we want to be an asset exchange, asset exchange. We're not saying we're just equities. We're going to be NFTs, and we already do with, we work with Templum and Rally Road, alternative investments. Collectibles, you can buy a piece of a Ferrari, you can buy a piece of a baseball card, collectibles on our platform. Our idea is that whatever the retail investment world wants to invest, we want to provide for them. But we want to do it in a very frictionless, fractional way.
Okay, well, we'll have to leave it there, Bob. It's really been interesting chatting. Thank you so much for coming on the show, and best of luck in 2022.
Peter, thanks for having me.
Okay, see ya.
Bye-bye.
You know, what an interesting story that is, the DriveWealth story. I mean, back in 2012, fintech was barely a term, let alone embedded finance, and they've really become the world leader in embedded finance for stock trading. And it was really interesting there to hear Bob talk about, they're moving into other areas. They've done such a great job in the stock trading. You can be sitting in dozens of countries around the world now with your smartphone, and you can invest in US stocks just like you can do it here in the US. That's a very complicated process, as Bob shared some of that. What a great thing to do for this country, for the financial system in general, where we have capital being able to flow across borders and go to where it earns a decent return. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Before we go, I want to remind you about the brand new event from Lended Fintech. Fintech Nexus, the Dealmakers Summit, will be the first major in-person fintech event of the past 18 months. A hand-curated audience of venture capitalists, bankers, fintechs, and debt investors will be meeting face-to-face at an event 100% focused on doing deals. It will be happening in Miami on September 1st and 2nd. You can apply to join and find out more at lendit.com.